Let me ask you something. Imagine this. The US government, the biggest holder of gold in the world, decides to sell off all of its gold reserves and replaces it with Bitcoin. I know, sounds like a scene straight out of a finance thriller, right? I mean, we're talking about 8,000 metric tons of gold, worth over $500 billion, just poof, gone, traded for a digital currency that can go from $60,000 to $20,000 in a few months. Are you excited? Nervous? Maybe both? Well, this idea isn't as outlandish as it sounds. The debate has been popping up more and more in the world of finance, with some arguing that Bitcoin is the future of money, and others, well, let's just say they're not so convinced. So, what would actually happen to gold if the US decided to pull the plug and switch to Bitcoin? Would it be the end of gold as we know it, or is this just a really bad idea? Stick with me, because we're diving deep into all this and more. Trust me, you're going to want to hear this. Alright, let's talk about gold. I mean, for thousands of years, gold has been the go-to asset whenever people want to protect their wealth. Over 5,000 years of history, folks. Think about it. Empires have risen and fallen, economies have crashed, but gold, it's still here. You can't say that about many things in life, right? Gold's the asset you go to when everything else is in chaos. Wars, market crashes, financial crises, you name it. During times like these, gold just shines. No wonder central banks across the world hold it as a kind of insurance against economic storms. You're probably thinking, okay, sounds great, but why does this matter right now? Well, here's the thing. Gold is reliable. You can physically touch it. It's finite. And while its price can fluctuate, it doesn't swing wildly like some other assets. For instance, gold surged in value during the 2008 financial crisis, while stocks took a nosedive. It's kind of like that one friend you can count on to always bring snacks to the party. Gold's always there when you need it. Think of it like this. If the stock market's a wild roller coaster, gold is like the sturdy Ferris wheel that just sits there, watching everyone else scream and panic. It might not have the thrills, but you know it's going to be steady. Now let's bring in the new kid. Bitcoin. It's only been around for about 15 years, but let me tell you, it's already caused a ton of drama. Bitcoin's like the wild party animal that shows up, grabs everyone's attention, and leaves the room in chaos. This thing has been all over the place in terms of value. One day it's skyrocketing to $60,000, the next day it's crashing to $20,000. Michael Saylor, the co-founder of MicroStrategy, is one of the loudest voices saying, Bitcoin is the future, forget gold, it's all about digital gold now. And sure, he's got a point about Bitcoin's potential growth. If Bitcoin continues to grow, it could easily outshine gold in the long run. But here's the big question, can we trust it? Can we really put our faith and the nation's financial reserves on an asset this volatile? Let's look at an example. In 2021, Bitcoin was riding high, reaching over $60,000. But then, in 2022, it dropped by more than 70%. That's a lot of value to lose in just a few months. Imagine betting your entire savings, or in this case, national reserves, on a coin that could lose most of its value in an instant. It's like putting all your money on a horse that might trip over its own feet halfway down the track. Let's break this down a bit more. Gold is stable. Yeah, it can go up and down in price, but not nearly as wildly as Bitcoin. Gold has weathered economic crises and wars, but it doesn't usually take those sharp, unpredictable dives. Bitcoin? Well, that's a whole different beast. It's like that roller coaster we were talking about. Up one minute, down the next. It's exciting, sure, but do you want to tie your economy to that kind of ride? Let's say you're about to build a house. You'd want a strong foundation, right? Now imagine if your foundation was made of jello. That's Bitcoin. Great potential, but the foundation isn't rock solid like gold. Here's a fun fact about gold. It can't be hacked. You can't just crack open a security system and steal it. It's physical. You can touch it. Bitcoin, on the other hand, it's digital. That means it can be hacked. Imagine this. The United States government decides to replace all its gold reserves with Bitcoin. Great, right? But wait, what if hackers decide to break into the system and steal everything? It's happened before. If Bitcoin were suddenly targeted, we could be facing an economic disaster. Back in 2020, a major hack compromised hundreds of millions of dollars in cryptocurrency. It wasn't a pretty sight. And if Bitcoin were the United States' main reserve, it could make the entire country a target for cyber criminals. You know how sometimes when one person leaves the room, someone else swoops in and takes their spot? If the United States sells off its gold, countries like China and Russia would be first in line to snatch it up. These countries have been stockpiling gold for years, and they aren't slowing down. Now, the US has over 8,000 tons of gold, but if the US sells its reserves, China and Russia could increase their gold holdings significantly, making them even more powerful on the world stage. The US would essentially be giving away its seat at the table, while other countries would just keep stacking up on gold like it's Black Friday. Think of it like this. It's the financial equivalent of moving out of your dream house and handing the keys to someone else. Sure, they'll take care of it, but you're the one who lost the prime real estate. China and Russia have been aggressively increasing their gold reserves over the past decade. Don't believe me? Look up China's gold reserves, now sitting at more than 1,900 tons. Let's be real for a second. If the US decided to sell off its entire gold reserve, what do you think would happen to the price of gold? Spoiler alert, it would likely fall. With that much gold hitting the market all at once, prices would plummet. But, and this is important, gold would eventually recover. You see, the market might freak out at first, but then, gold's timeless value would prevail. It's like if a major celebrity suddenly gets canceled. People panic at first, but eventually they're back in the limelight. Look at what happened in 2013 when Cyprus was forced to sell off part of its gold reserves. The price dipped temporarily, but it didn't stay there. Gold bounced back, and that's the thing with gold. It's got staying power. Here's where things get really tricky. Moving from gold to Bitcoin isn't as simple as swapping out your old phone for the latest model. The legal and regulatory challenges would be huge. To make this work, the US government would need to overhaul its entire financial system, including tax laws, security regulations, and digital infrastructure. Imagine trying to update an entire financial ecosystem that's been in place for over a century. It's not a quick fix. What if the US didn't go all in on Bitcoin, but instead kept a small percentage of its reserves in Bitcoin? We're talking about a diversified portfolio, some gold, some Bitcoin, some other assets. This way the US could hedge its bets, still holding on to the reliability of gold, but getting a slice of Bitcoin's potential upside. Countries like Switzerland and Japan have already started adding Bitcoin to their national reserves, but they're not throwing all their chips on the table. Instead, they're balancing it out, which seems like a much more cautious and practical approach. So what's the bottom line here? Is swapping gold for Bitcoin a smart move? Well, I think we can all agree it's a huge gamble. Sure, Bitcoin's potential for growth is undeniable, but its volatility and cybersecurity risks are major red flags. Gold has been the trusted asset for thousands of years, and it's not going anywhere soon. The US could diversify by holding a little Bitcoin, but completely abandoning gold for something as unpredictable as Bitcoin? Probably not the best move. But hey, that's just one guy's opinion. What do you think? Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.